May profits be upon you. I hope your weekend is going great. We are going to jump right in. I'm trying not to do too much yakking on this one and stretching out everything. You know how long-winded I can get. So let's jump right into it, shall we? What do I want to do is go over the calendar. Why? Why do I want to go over this calendar? Because we got some very important events coming up. All right. This is going to freeze the markets. There's a couple of things that's going to freeze the markets and make things go sideways. All right. Sunday, not so much. Monday, you see, we have USD and yen stuff, but this isn't going to move anything. We're going to see a lot of sideways action in the USD pairs up until Wednesday, because Wednesday comes the FOMC. So just understand, what I would suggest to you is hold off on USD pairs. All right. There are other trades, there are other pairs to trade other than USD pairs, because you're going to see a lot of sideways action. This is a better environment for scalpers for the beginning of the week up until Wednesday. If you are in USD pairs, USD, Euro, they're going to be affected by FOMC as well, because it makes up, the Euro makes up 57% of the Dixie, I believe it is. So there's other pairs to trade that aren't affected as much by the FOMC. All right. Understand, on Tuesday, the Aussie has interest rates. Interest rates will freeze the Aussie market up until Tuesday. All right. Hold off on Aussies. Hold off on the Aussie pairs up until Tuesday. That's what I would suggest and recommend. Okay. Because that interest rate, that's going to be a high impact kind of event. And what do we have on Thursday? Look at all this pound news. And then look at this interest rate. Okay. The pound pairs are the ones that I would say, I would recommend you trade up until Thursday, because they're not going to be as affected by the FOMC. And I would suggest that maybe markets might be a little sideways, but it'll be easier to navigate relative to USD pairs and FOMC ahead of them. And also Friday's news of non-farm payroll. All right, NFP. That's gonna be high impact stuff, man. And markets don't like to do a whole lot of transactions or whatever prior to it. You understand? All right. And market makers are going to be setting up for the big move. You'll start to see pairs. Let me see if I can get this thing. Yeah, where are you? Where are you? I said annotate. All right. What you'll see is pairs moving, like doing the sideways action, right? And then come just before the NFP, they might start coming down. You might see pairs coming to get all this liquidity at these low points here for people taking longs, right? And then NFP comes, boom, takes out the highs here, boom, right? NFP comes, and this is where you will want to get in trades. You will wait until after the news, after it settles down, after the liquidity is taken. You can see where price comes back up to take these highs. Then you take the shorts there. You know, we'll go over the pairs in a second, and I'll tell you, I'll go more into that for sure. Okay, so just be careful on the for these pairs. On Thursday, you have what's the name? Non-farm on Friday. Come on, man. Really? All right. Okay. Man, what is that about? All right, so, and you have Aussie on Tuesday. All right, so no, I'll be repeating it throughout the analysis today. Okay, just to give you reminders, because I don't want anybody getting caught out there. Let's start with the Dixie. Let's go to the monthly. We're going to do our breakdown. All right. Now, the first thing, what do we see? All right. The first question that should come to your mind when you see a market like this, you say, where is the last break of structure? The last break of structure is right here. Why is this considered the last break of structure? Because I said so. First of all right. And second of all, we go lower low, lower high, lower low, lower high, right? This isn't really a lower high because it didn't make a lower low. Lower highs make lower lows. This is a higher low relative to that one. So this is a swing high, a good swing high because there's more than two candles. So it is a sure enough structural point, right? And we see that price has made a double bottom as well. All right. But this high is higher than this one. So we want to make note. See the break of structure? The break of structure means price is shifting from bearish momentum to bullish momentum. So this is a higher high relative to that. Relative to that. Got it? We made a higher high. And what do we expect after a higher high? A higher low, of course. So now is the time to start putting in the points that we would call like floors and ceilings. All right. I'm looking for the demand zone, right? I'm going to mark this one because there's a break of structure here. Price wants to return to impulse, the impulsing or originating order block that sent price to break structure to the upside, the original impulse. All right. And that could be this one. It may be this one. All right. So I'm going to mark them both. Yes, I marked the whole candle. Yes, I marked the whole candle. I'll repeat that. Some people will mark it this way from wick here, down here to a body. All right. I do not. I take the whole candle because it's not the last down candle before the bullish candles. It's the last down move before the up move. All right. I'll go into detail, like more detail about that in another video. Okay. But that's an important point to remember. All right. The last down move before the up move. This is an entire bullish order block. All right. On a higher time frame, all of this moves over. All right. These move over and it makes a bullish engulfer on maybe the 2 or 3 month time frame. 2 months, 3 months time frame. All right. This is a down move. And we have to, it's important to know that we tend to refine it to the smaller time frames as we go down in time frames. And that way we can, when we see price action a little bit more clearer on the smaller time frames. But let me go ahead with this analysis anyway. So what are we expecting? We're expecting price to pull back either here or here for a return to impulse. All right. This is not a bad spot to look. Why? Because there's missing price or a fair value gap, an imbalance. This is where price has moved inefficiently, creating an imbalance. And the markets don't like moving like that. They like to balance off the imbalances by coming back to it at a later time, whether it's immediately or a little while later. Like you'll see here. See, this is an imbalance. This is an imbalance. This is an inefficient move of price when it's just all bullish, when it's all buyers. all right, just buy orders, all right, price will come back to this level and balance it off, all right, take out the inefficiency, all right. So, but you need to know that price likes to take those out. So it kind of motivates price. It attracts price like a magnet. And when you see inefficiencies right before an order block, it kind of raises, it's like a confluence. It raises the probability that price is going to probably want to see that order block, go through that imbalance, and to tap into and mitigate that order block. Got it? All right. So these are our two places of two POIs that we want to look at. This one and this one. All right. This one first. All right. Because it's closest and it's the last one, the last down move before the break of structure. I hope you got all of that. All right. So we're looking for price to come down and make the higher low here. Now, let's take a look at the weekly, and we'll take a closer look at this move that we're thinking about. All right, this is the higher time frame. The higher time frame sets up the targets for the lower time frames. That's in simple terms. That's what we're looking for. As soon as price hits the POI, our POIs, points of interest on the higher time frames, we go down to lower time frames, look for entries. We look for the price action, bullish or bearish price action, and we look for valid entries. Okay. Now we see this impulse here. It looks a little clearer here. Interesting, right? And I want to mark off this time frames, the weekly order blocks, right? All right, because price could come all the way down here. Just tap it off, boom. Right now, there is an inefficiency here as well, so that gives me some extra confluences. Okay, that price would want to come on by here, balance off that imbalance. Now, also, when you see a move like this, there's a way to measure with your Fibonacci. Pay attention. You go from the low, from the beginning of the impulse to the end of the impulse at the top here, right? And what you want to do is ignore everything above the 50% line, because that's for retail. All right, this is premium pricing. This is discount pricing. This is where institutions want to take a long. They don't want to take a long from here. That's what retailers do. Dumb money. Smart money, take the discount price and get all of that going up. Got it? Above the 50, you want to avoid. Below the 50. So we're looking for price to come down here, somewhere down here. And it just so happens that this weekly order block, and we'll mark it as a weekly. Sometimes I forget to mark them. We'll mark it there, and that'll be one of our POIs. Okay. All right. This is also, again, the last break of structure. All right. I also want you to bear in mind there's liquidity up here for price to come and get. All right. This is a liquidity pool that price will surely target. And it's a reason for price to want to go up there and go in this direction. Grab that liquidity, fill in the imbalance, la, 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 la. All right. We want to see it come down and hit and complete that mission for the weekly time frame. All right. But we still have the same break of structure to the top. So we still have the same circumstances. Price wants to make the higher low here. This will be our POI, and we're waiting for price to come there. Last one, let's go to the daily. And what do we see? Where's the last, whoops. All right. We don't need to have that Fibonacci there. All right. Where's the last break of structure? Last break of structure is to the downside. Can you see it? Actually, I'm wrong. The last break of structure. All right. I was looking at this. So when price breaks here, we're looking for a return to impulse. And that's what happened. Boom. See, I had to use the whole string. I'm glad I ran into this. This is a daily order block. I want to make sure I mark that. But I'm glad I ran into this for you because this is why I use the whole candle. You see that? From the wick to wick. I use the whole candle. Why? Because if I was the market like some of these other guys do, I would have said, hey, it didn't reach my my bearish order block. And they would be wrong, in my opinion, because it seems very clear. I got the wrong color on this thing. It seems very clear that price did come up to that order block and mitigate this order block. This is your institutional candle. Remember, this is the whole move here. These two candles, ICT will tell you this is the last up move before the down move. And he's the one who named these on order blocks. Okay. So credit to him. All right. Use the whole candle. It came up to mitigate. And what do I expect here? This was my POI. If you remember from last week, matter of fact, let me show you something. If I can pull it up. Doggone it. I know it's in here somewhere. Let me see. Oh no. Yeah, I done messed up. Yeah, if you remember from last week, I told you I was looking for price. I had a picture of it, and apparently I must have deleted it. Yeah, I sure did. Yeah, I told you that I was looking for this to be a left shoulder, a head, and I called it here. I said, I'm looking for price to come up and then down because I wanted to see that right shoulder. I think that I was pretty accurate in that. Give me some credit. Drop me a comment. Let me know. Hey, yeah, you were right. All right. Anyway, we're hit here. We hit our POI. Now we have different POI, right? We're looking down in this area here. When price comes down here, I'm hoping that it'll do its thing, make a higher low and continue up high to a higher high. This would mean price would be weak, right? It would be bearish for the Dixie, for the USD is what I'm talking about. It would be a weak USD, all right? Now, just because it's here doesn't mean that it's just gonna suddenly drop, okay? We could see a small head and shoulders right here, same way, boom, 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 and come down. I don't know why it's leaning like it's a gangster or something. All right, it can make a small one on the smaller time frames because these head and shoulders patterns, these Quasimodos, always show up when price transitions from bullish to bearish or from bearish to bullish. All right, you hear me say that a lot. But now, again, I'm going to remind you, come Wednesday, this technical analysis could be useless. All right, price could start moving up and break this high, come up here, grab the liquidity. I'm going to mark that. Matter of fact, I'm glad you said that. All right, it could come up here, mark this. It can come up here, grab the liquidity, and then come down. It could very well do that. All right. I would not be surprised to do that without it closing above. It could wick high just for the liquidity and then come down here. Come on Wednesday. I don't know. Technically, for this today, this looks like, it hit the POI and we should see price transitioning on the 15, 5, and 1. We should see price transitioning to the downside. Okay. That's as far as I will go for, with the, and that's got an asterisk next to it. That it might not mean anything come Wednesday. All right. Now let's move on to another pair. Let's go to EURUSD. All right. On EURUSD, why did it just flash and not? I mean, you saw the picture. I don't understand why it just did that. There it is. I don't understand why it just did that. I really don't. Okay. Why aren't you visible? There it goes. All right. Oh man, I'm sorry. I was trying to have this all prepared nice and pretty for you. All I wanted to do was remind you if I was accurate in the call or not on my last video. And as you can see, I was pretty accurate with EURUSD. What was I looking for? I called it here. That this was going to be tapped for mitigation, this order block. I said price will continue up higher and come on, and then come on down. We're going to look for the lower high and then a lower low. Where did price go? Where did I make that call? I made that call right here. Price did come down to this order block. Price did go up here, tap the order block, the bearish order block, and come down. And I'm looking for more price. I'm looking for more downside action. All right, we can definitely come up here, test the what do you call this? The base candle, sorry, the base candle of this order block, this bearish engulfing pattern. All right, and then come down. All right, that would give us a proper transition. Okay, head and shoulder, a proper transitioning of price, and then we can see it come on down. All right, so that's what I'm looking at. Again, your boy was just trying to be accurate. Oh, let's not drive me crazy, please. All right, now what do we see for the EURUSD? Just what I told you. I'm looking for price to come up, test this order, this base candle, and come on down, and this becomes the bearish order block that I think price will respect. Okay, and that would give us again a nice transition of price to the downside, so we can make a lower low. Easy enough, right? Let's go to the next pair. What is my next pair? I have Euro Aussie. This one doing away with all of this. All right, I haven't done this one in a minute. It's a nice. The first thing that pops out at me is this transition of price here from bullish to bearish momentum, and it dropped heavy. Now, again, I want to mention to you, Euro Aussie is going to be a good trade. The Euro Aussie, Euro not NZD, Pound Aussie, Pound NZD, those are going to be good pairs to trade. in my opinion, during the week, and they're going to be favorable to technical analysis as far as I'm concerned. All right, they're going to. I'm looking for them to be bearish, to continue bearish. I'm going to see. I'm looking for maybe a pullback, to make a bear flag and then continue to the downside. That's what I'm looking for. All right. As far as Euro Aussie here, you can see the stair step. I love these stair steps where we're making continuation patterns. We're just talking about drop base drops, drop base drop, drop base drop. We have a pullback here and then a continuation pattern. I'm looking for that to continue. All right, we are coming to a higher time frame low here, and so I'm going to back up a minute and take a look at the weekly and say, okay, you see that price made a lower high after this pullback. I'm looking for price to break these lows. Right, I'm looking for price to break these lows, grab the liquidity, grab the liquidity that is available, and then pull back for the lower high again. I'm looking for this lower low to be made. All right, is there an order block down here that has the potential to turn price around? Well, the one that I see that's closest on the weekly is this one. Hold on. Let me back up. See this down move before the up move? That one was tapped here. And then we have that one. Okay, so this one requires a little bit deeper digging. Okay. Wow. All right, so you see this pattern here? This is a evening star. I mean, the morning star, sorry. A morning star. And on a higher time frame, this is a bullish engulfer. So I'm looking at it this way, and I'm going to refine it once we get to the weekly. Bullish. All right. See if we get to the weekly. See if I can refine that some. Of course I can. Right there. Oh. All right. Yeah. See how it's tested there, it's tested there. And then we come back for a deeper probe into it. This has been once you get several tests from of a supply zone or a demand zone like this one, it gets weaker and weaker, and at some point price will pass through it. It will finish off all the bullish orders in this block and go and seek to mitigate lower. So I'm waiting for price to continue. I'm looking for price to continue down, and I'm thinking that the latest, if I'm going to look for breaks of structure, boy, I tell you what, that's going to be a task. We had one way up here, but we got one here, and I'm looking for price to return, at some point, return to impulse after a break of structure. And we haven't had a real pullback. So that's why I'm expecting that bear flag and then continue, lower. So we had a significant pullback here, and I believe this is going to be this is the area. I believe that's the area that that might be where price wants to turn back around. All right, we did have a 2-candle pullback here, which is interesting. So I want to make sure I notice that that would mean a break of structure as well there, but price did already mitigate that box. So when price does return back, when price does come back for a return to structure, we have to pick out an area in this leg of the impulse where we think price would turn. And I'm thinking it may look to a breaker block, because I don't see an order block until it gets back up here. All right, now price could very well go all the way back up here, and it would still be considered bearish, like I explained earlier. All right, we do have a lovely transition here, so price may come back to this originating order block up here. But that's a long time. That's a long time coming, and we don't really. That's not at the front of my reptilian brain right now. If I can just get this right. All right. So we'll see. We'll see how price travels. Because again, we got to wait till it pulls back into discount pricing before we think about that lower low. All right. If price comes down here and continues bearishly like it's been dropping heavy and breaks the structure here, this would be a major break of structure, and you will definitely know price will definitely be looking to go lower. All right. I'm looking at it on the weekly here. I'm sorry. If I'm looking at it on the daily, I'm looking for a proper 2-candle pullback area, higher low, and all that good stuff. We had those breaks of structure up here. These pullbacks, this area here could be like this area here. It could be the area that price might want to find a pullback to, but I'm waiting until it gets to discount pricing. You wait till price comes to you. So this one bears watching. All right. I believe it'll continue bearish, and I would be scalping up until, because this is an Aussie pair, up until Tuesday. I would hold off on this one. I would hold off on this one to see how it develops. It may go sideways here, or it may continue to drop. But this is the pattern on the daily. I am waiting for a price to continue bearishly, and I'm looking for a price to transition at some point. All right, being that it had a nice deep penetration over here since the last touches all the way over there to the left. I'm thinking price is going to continue down until it breaks down here, until it breaks this structure. Yeah, that's where I'm leaning, and we'll see how it goes from there. Okay, I'm going to put a little arrow on this one. All right, it may come back, might chop up here a little bit, and just chop down until it breaks this structure, and we'll see what happens at that point after that. Okay, just remember Tuesday is coming for the Aussie. Next, Euro New Zealand, very similar situation. You see how bearish it's been. The last break of structure is easy to see. You see that 2-candle pullback here and then higher. All right, it's making a lower high. Just mark it here, right? And we'll look for a proper pullback. After a break of structure, you wait for price to pull back, and we'll see if it makes it all the way back up here. I think that's a pretty tall order, to be honest with you. Let's see. All right. May come all the way back up there. Maybe so, maybe no. All right, but we have a major structural break here. So it could continue bearishly, but I am waiting for price to make a lower high after making a lower low. I'll wait for the lower high to come and then take a lovely swing short from the order block it chooses, where it'll come back. I need to see discount pricing. You understand? Let me take a look real quick on the monthly. I just want to take a peek. See how heavy it dropped? You see these the breaks of structure here? So I am waiting for price to come back and test this this supply here. This is a monthly supply. Monthly. Okay. All right, let's go to the weekly. Yeah, we brought it down a little lower. This is the beginning of the up move. So I'm waiting for price to do that. Yeah, yep. Might be a few days. It might be Wednesday. You know what I mean? If I can just get my life together over here. All right. So this is the daily. Okay, and this is the was this the monthly? I believe that was the monthly. God darn it. Okay. All right. I hope you're able to follow me with these analysis. All right. We are right now in this order block here. All right. So I can expect what you can do. You see how it was mitigated here? Interesting to me. All right. To the wick. All right. Let's see. All right. There you go. All right. This is a bullish. All right. What we're going to look for in this POI, see how it's been tested a couple of times already. Not here, but here. All right. You see how deep it's going in. We'll go down to the lower time frames, the hour, the hourly, the 15-minute, and look for price to transition from bearish to bullish. So we can look forward to taking a buy to the sell move. You understand? This is going to be the bigger move to the downside. But we can, that's a lot of pips between here and there, and we can get all those pips as well. That's a high probability trade once we see confirmation that price is transitioning from bearish to bullish. I hope you get that. All right. And what was that? Euro New Zealand. Let's go to pound USD. All right. And what do we have on pound USD? Where's the last break of structure? Do I have anything to share here? Yes, I do. All right. What did I say was going to happen here? What I was looking for. Why this thing gives me such a headache. All right. We called it here. I said price will come up here. I'm looking for price to come up here and test this right shoulder. I'm looking for price to test that right shoulder and come on down. That's it. That's all I wanted. And what did it do? What did price do? All right. Where is it? Where is it? Is it here? Is it, where was it? Man, I'm lost. Was it here? Where is it? Hold on. Oh, I see. We're on the wrong time frame. 4 hour. That was a 4 hourly analysis. 4 hour analysis. And let's find the exact spot, shall we? Okay. I said it. I put that analysis here. Went up, down, down. This was our head and shoulders. All right. And this is where I made the analysis, and price did come up to that right shoulder. Bang zoom. Came down like I said it would. It came up though to give you a second chance to get into a short. If you didn't take this short, this was the big one. I would say I was on point. Leave a comment. Tell me if you took the short, if you shared it in the glory. Let me know. You know what I mean? I like to get it right. Price overshot, stole the liquidity from these points, but did not close past these highs. That's the key. If it closes past this highs, then you know the bias is changing. But let's go back to the daily. Let's give some let's do some analysis here. All right, where's the last break of structure? We have a break of structure here to the downside. What did price do? What do you expect after a break of structure? I'll draw it for you. What do you expect after a break of structure to the downside? You expect price to return to impulse. Where's the impulse? Where's the impulse that led to this break of structure? Where was the first place you would check? First place I would check is here. Because from here, price broke structure. This would be the first one I would check, this institutional candle here. But this is the one that led to that originated the impulse. You always want to mark them as you go. And guess what? Oh, there goes my mouse. There you go. I got problems, man. Price came back here perfectly to the impulse, to the original impulse. And this is where you would take your shorts. I took a bunch of shorts here, all right, on the lower time frames. Leave a comment if you shorted GU this past week. There was a bunch of opportunities to do so. It was actually awesome. So now, where is the last break of structure? We had this one leg of structure. This is one. There's no two candle pullback here. So this is one leg of structure from here. Now, what about here? So we have a two candle pullback. There's a two candle pullback here, and this one trades outside the range of that one, right? So I'm going to call this the lower high. I mean the higher high. Well, it's not really a higher high until it breaks the last lower high. And this is the last lower high here. This is the lower low. This is the lower high here. Now, I don't see it as a two candle pullback though. That's interesting. All right. On the next time frame, it doesn't matter. We're reading this time frame here. All right. And if you don't have two consecutive candles, one trading outside of the range of the previous one, like you have here, then it's not a legal pullback. All right. This is one leg of structure. Got it? So this is our range, the bottom of the this candle and the top of this one. We're in the middle of the trading range. Got it? All right. So this is the lower high. This is the lower low. This is the lower high. Got it? Just keep it simple. Lower low, lower low, lower high, lower low, lower high. What are we expecting in the daily time frame? We're expecting the lower low to be made. So from here, I'm expecting price to come back, test this base candle, or at least fill this inefficient move space here. Okay, I'll draw it out for you. This is an inefficient move here. Okay, up to this point. I'm expecting price to come back, at least balance off this imbalance, and maybe test the base candle of this bearish engulfer. all right, and then continue bearishly, all right. Again, this is a USD pair. Just know that this analysis may be an exercise in silliness come Wednesday, okay? But so right now I'm bearish, all right? And come FOMC day, all right? I'm looking at all these points here, the tops here. I'm looking at them for liquidity targets for price, okay? So maybe we get this, okay? And come Wednesday, I believe that maybe price wants to come up and grab the liquidity at these relative equal highs. There's a lot of liquidity laying up here for that. Okay. Just bear that in mind. All right. But right now, as I'm reading this, what's on the chart in front of me, you know, not prognosticating. I'm just thinking that if it was a regular day, a regular technical analysis, this is how price would go. I hope you understand that. All right. All right, let's check pound Aussie. Don't even worry about any of that. Okay. All right. Where's the last break of structure? This is a ridiculous candle. That's a broker thing. Ridiculous. Oh, Wanda, come on, man. All right. How do we see it? How do we see it? We have a break of structure here. Right? All right, we got a break of structure here. And put that on the bottom. All right. And we have yet to have a nice pull to back a return to impulse. You know, have we had a good pullback yet? No. Price has been very heavy, very heavy. The Aussie has been very strong against the pound. Aussie and New Zealand dollar have been the strongest pairs of strongest currencies. So it's just been pulling price down. Are we near a place where price may reverse? Yeah. There's a supply here, right? I mean, demand here. Why is it? Okay. And this might be an area that on the lower time frames, like the 15, the 5, the 10, the 15, we'll see price start to transition so that it could return to impulse after breaking structure. All right. We have a bunch of short-term lows that were broken here. You can see these like the return, what do you call it? Short-term lows should trigger a nice return to impulse. And that can be any one of these order blocks. This one had a nice impulse to the downside, right? So I'm definitely going to highlight this one because I want to highlight the whole thing, like you know how I do it, all right? But the body is here. And you see how price reached up here to tap into it. So I'm gonna bear that in mind. Anyway, I'm looking for this, and maybe price will come up because it's already been tested. Maybe price will come up and visit that that median threshold, the means threshold of this candle, the middle part of it, where there's a lot of transactions going on. I'm looking at this, I'm looking at price, and I want to see if price gives me the transition here. If it continues to go on through, then then we'll wait. We'll wait patiently until we see the pullback. But you see the rejection coming right now. I'm going to be looking for that transition. And what am I looking for? An inverted head and shoulder kind of pattern or Quasimodo. All right. And this would be your order block that it come back and test. Got it? That's what I'm looking for. It's that simple. If it looks like this, so what? We're looking for low, lower, higher. 1, 2, 3. That's it. But we're looking for that on the lower time frame. Matter of fact, I'll leave that there. No, it's not a big deal. I'm looking for a return to impulse and then a continuation of this bearish momentum here. We'll see, because you got this is an Aussie pair. Bear that in mind. Let's go to the Aussie USD. All right, you don't need to see any of that. All right. What do we see? Where's the last break of structure? The last break of structure seems to be right here, and that's a major piece of structure there. Look at that, right there. Okay. We see how prices kind of moves a little to the side here. This is a USD pair and an Aussie pair. All right. This isn't the greatest one to be trading before Wednesday. Tuesday, Aussie is going to be affected big time. And then the next day, the USD is going to be affected big time. You want to hold off on this. You just want to watch it and see what price does with it. All right. What the market makers will have it do. All right. Where is the liquidity? We got liquidity points right here. Boom. Right. Why wouldn't it market makers want to come up and grab those liquidity points? Okay. And then reverse on retailers. You know what I mean? If the decision comes out, I can see the USD getting strong and returning and having price return to impulse here. All right. I can see that happening. You see how nicely price transition here. This is what I'm looking for. This is what I'm looking for. All right. All right. And where would I mark this this right shoulder? Would I mark it here? Like so? Or would I take this whole move? Because look where the other bullish order block is. This level is going to have a lot of bullish orders, period. Bullish orders, buy orders. Okay. So bear that in mind. All right. This is a daily. So I'm looking at the whole move here. See how price come back and tested it as well. I'm looking for a return to impulse to make that higher low and then the higher high. All right, this is be what do you call a discount? This will be a discount price. This will be the retail 38% fullback of Fibonacci retracement or above the 50 retracement. This is not good. Don't take those. Wait until price comes down and gives you that discount like institutional traders do. Okay, this is an institutional trader move. Wait for the discount. All right, you'll be happy you did. All right, so that's what I'm waiting for here on USD. I want to see that higher high. If price grabs that liquidity first, I'm not going to be shocked or amazed, but I'm going to register those whether if it holds, if it closes above these lines, then I'm going to register them as a breaker structure, and then I'll be looking for price to maybe come back and test these as the impulse, the originating impulse, all right, as opposed to making it all the way back down here. All right. But up until then, I'm looking for price to come back down and then up. Okay. Let's go to another Aussie yen. Aussie yen is a funky pair. All right. This is Aussie is one of the strongest, and yen pairs are the weakest. So bear that in mind. That's the way it's been for the last week or more. Okay. So you want to keep that in mind. All right. Where's my last breaker structure? The last breaker structure is right up here. Right. And we have a close on the daily. We have a daily close above that level. So what am I expecting? You know what I'm expecting? I'm expecting a return to impulse. I'm going to take this whole move here, right here. Why did I pick that move? Well, you have a bearish or a bullish order block here. You got a bullish order block here, and this is a CP pattern, a continuation pattern. And then on this side, you have the beginning of this bearish move. Okay. So I'm looking at this area as my POI. As soon as it gets over here, I'll be looking for price to maybe transition. You can see that there's inefficient price movement all up and down here, right? So maybe price might find a reason to reject from here. So I'm gonna bear that in mind too. You see how this rejection comes from up there and then again here. So I'm going to be looking here. All right. Again, this is an Aussie pair. Be careful, because Tuesday, this could mean nothing. It could go ahead and seek higher prices. It ain't nothing I can do about it. All right. Now look, these are the next targets if price wants to continue bullishly. And does it have incentive to go up here? There's a bearish order block here. There's inefficient pricing above it. You know, this is the case for price to go higher is after such a bullish move like this, such an aggressive bullish impulse like this. I'm thinking price will want to come back and then make it a higher low, then the higher high. We'll see. We shall see. Okay. Meanwhile, I'm not waiting until it gets down here. I'm going to look here, like you should for the other pairs. Look here on the lower time frames for price to transition from bullish to bearish. And if we see signs that prices turn to bearish momentum, we could take the short here to the buy move here, the bigger and better trade. This is going to be a nice swing trade once it gets down here, but this is a nice trade to get there. That's all I'm saying. That's all I'm saying. We can be here for a week or more, and then take this trade for another week or more. Make sense? Let's go to do I want to go to CAD yen? No, I don't want you to do anything with the CADs. I'm going to avoid CAD pairs. Right now, they're like neutral to, kind of strong. And oil, that's going to be a whole different thing. I think we're going to see more effect by FOMC with CAD than we will with oil. It'll end up following oil later, but we're going to see it impacted by the CAD, and there's going to be better pairs to trade. The currency is in the middle of the strength meters, okay, so to speak. So let me just move on. USD JPY, I'm not suggesting that one. you know, because you just got to wait until Wednesday. Let's go to NZDUSD. NZD is one of the stronger ones. NZD and Aussie are at the top of that list. I got a whole lot of things on here that, you know, require a lot of time. All right, so we're going to keep it simple. Where's the last break of structure? All right, if you remember what my analysis was on the last trade, on the last video, I said we had a break of structure to the top, looking for a return to impulse. Went sideways. It went sideways. All right, I'm waiting for that price to show transition so that it can return to impulse and then continue higher. Now, it made a higher low, it made a higher high. So, you know, my logic, it seems to be pretty, you know, pretty sound, but, you know, price does what it wants. You know, the markets do what they want, what they want it to do. Okay, so until I see price transition on the lower time frames from bullish to bearish momentum, you know, I'm jumping in no trades. That thing might start climbing after the USD news, all right, which is coming Wednesday. So be careful with this pair again. But I'm telling you what I'm looking for. Okay. Maybe price bring its tail on down here, and this be our POI, and we'll look for price to transition from bearish to bullish momentum and come back, make this higher low, and then make the higher high up here. All right, that makes sense. All right, now if price continues higher, if the USD comes in weak and NZD stays strong, then we're going to look for a price to go higher. All right, there are liquidity points here. Let me point them out. Got a liquidity point here, here, and here. All those highs. Okay, price could go up there and grab those things and then come down as a return to impulse and then continue higher. All right, after an aggressive impulse like this, you're expecting some kind of pullback. This is where the discount is. This is where the retailers get hooked. All right, don't be like that. All right, don't be one of them. We got a double top here. All right, look for price to give us our head and shoulders on the lower time frame, come back up and test, and then come down, and then we'll look for the bigger trade down here after it gives us an inverted head and shoulders and continues higher. Okay, that's what we're looking for. Boom. Just be careful. This is a USD pair. All right, NZDJPY, the strongest to the weakest. All right, what do we see? Let me get rid of all of that. All right, and where's the last break of structure? Too easy. We see price broke a major structural high here on the daily. All right, and we haven't had a righteous pullback yet. So that's got to be in the cards somewhere, somehow, some way. Anyway, what do we? Price could very well use this whole move here. I want to take a quick peek at the weekly. All right. Oh man, we got a down move here, like I was saying. All right, and that could entail this whole move. You see how price made this bullish engulfer here? This is a variation on it on a higher time frame. This is one piece. All right, this is a bullish engulfer, and it came back, tested the base candle, and continued higher. All right, this move, I believe, maybe this is on the monthly now, maybe where price comes back to. Okay, so this is going to be my POI for the return to impulse when it decides to do so. Because it's up high, man. That is high. This is a weekly. This is a weekly. I'm going to make sure I mark this as weekly. Come on, man. What? Oh, man. Weekly. Yeah, this is, I'm nearing the end. I'm nearing the end of this. So I'm hoping that you can follow along and look at all this price in this inefficient move. So price has got to balance this out. Price has got to balance this out. It's got to come back and balance that. All right, so I'm looking for that move on the daily. All right, so what am I looking for here after this break of structure here? I didn't even mark that. After this break of structure here, right? I'm looking for price to transition. I'm looking for a transition right here on the lower time frames. So we're going to go to the lower time frames and look for a valid short entry after we see our check boxes, you know, like the inverted, I mean the regular Quasimodo or the hidden shoulders. All right, that makes sense. I hope so. Yeah, that was the last one. Okay. So much for the Forex pairs, right? In the next video, which will be shorter, much shorter, I'll go over Bitcoin, gold, oil, and the indices, okay? I want you to trade safely, and I want you to make sure you check out my videos that are up on your screen now. Thank you for your support, for those that have been supporting me and giving me good comments, good feedback, all right? Don't forget to give me a like if you want to encourage me to create more videos. I will see you in the next video. Thank you for hanging this long, and bless you for staying the entire video. I appreciate that kind of support. Thank you. I'll see you in the next video, all right?